What's going on, everyone? We're back and we're trying something a bit different this week. It's 5:40 in SA. And yeah, thought of doing a morning session this week. Just feeling like the energy's been a bit low in the evenings, and that's just had a direct effect on the value that I'm able to bring to these backtesting sessions. And so the mornings when I feel freshest, the mornings when I feel the most focused. And I think uh, starting this channel and um, putting content out there, purpose was to hold ourselves accountable. And with that comes taking note of when we're slipping and when sessions aren't as productive as they should be. And we kind of just pivot. So I think this is um, one of the benefits of that. So thank you guys. Because at the end of the day, yes, it is for me, but I put that pressure on myself because I know that it's my work that's going out there. And so I want to do the best for me, but it's also because this is a direct reflection of um, the value I place on this. How I do anything is how I do everything. And so let's go. Week 36, missed trades. Last week I had a bit of an issue getting down on the 5-minute and the 1-minute time frames. Back testing USD JPY from the beginning of first quarter. And so I thought of I normally do this back testing session over the weekend, but I'm also trying to reduce the amount of work I do over the weekend just so that I get a bit more time to rest. And so testing how doing the session during the week works. I think just the most important thing is being able to get through it in this time that we have, because it usually does take some time. In future, I'll probably want to start a bit earlier as well. Just got to the desk a bit late and had to set up and all of that. So yeah, week 36 of 52, going through missed trades on Euro USD, AUD USD, Pound JPY, and USD JPY. And then obviously I'm testing a 100K plan. Just familiarize ourselves with the plan, looking at whether the daily is at EPD. If it is, look at the current 4-hour trend. If that's range bound, there's no trade. If the 4-hour trend is pro trend, meaning, for example, daily is at discount, and the 4-hour trend is bullish, so we are in alignment with that daily bias. If my entry is pro trend, I can proceed to trade parameters. If my entry is counter trend, meaning 4-hour trend is bullish, but my trade is a short, that is a pullback rider setup. This would be optimal alignment setup. For that pullback rider, I'd need 4-hour price to be within a key indicator area during London or New York kill zone. And if my 4-hour trend is counter trend, meaning again daily discount, 4-hour though trend is bearish, then that is a resistance setup, and that setup is similar to price not yet being at EPD, which would then require a trend towards EPD, a bearish trend. So let's say price is not yet at daily, but we've got a bearish trend at discount, and we've got a bearish trend towards discount. I then need, in this, coming back to our original example, I'm confusing you guys here. So, okay, hopping off the back of this. So daily, either at discount or heading towards discount, but the 4-hour trend is bearish, counter trend, then in those same circumstances, I would need 4-hour, 1-hour price to be within a key indicator area. So that is the resistance setup. then I can proceed to trade parameters. If daily's at discount, 4-hour trend is bearish, but my entry is pro trend with the daily, that is then the sniper entry. And then I need the daily and the 4-hour to have mitigated or to be in an order block, because that is your sniper entry. It's kind of like calling the bottom or the top. Then obviously, depending on what is satisfied, I can move on to trade parameters. And my trade parameters kind of look at whether my trade is in alignment with the 1-hour range. If it is, then I need price to be within EPD. EPD is basically 50% pullback. And then obviously we have various levels heading into optimal trade entry area from 62%. If that's the case, look for protraction counter to my bias during kill zone open. And then obviously look for time-based liquidity sweep or a key area mitigation. So order block, fair value gap, breaker block, mitigation, and then I can proceed to entry confirmation. If the trade isn't in alignment with the 1-hour range, then I look at whether my IPDA is clear, and that would be the market efficiency paradigm, looking at which direction price is taking out liquidity and which direction price is distributing in. And then if that is clear, then yeah, same criteria. Look for protraction comes to my bias during or before kill zone open. And then yeah, key area mitigation, time-based liquidity sweep. This is the part where I think more discretion is used now, because it's something that I've recently implemented and not something that's as black box as looking at a 1-hour range, plotting a fib, and then knowing when price is there. It takes a bit more interpretation. And so something I just want to, kind of just note and focus on. And then entry confirmation, just need a 15-minute reversal candle that's either a retrace, engulfing, double opposing, or doji wick. Then I need a 1-minute market structure shift or 5-minute key indicator area invalidation, which is a fair value gap being inverted or an order block being invalidated as confluence. And then minimum 1 to 3, no high impact news within 30 minutes, we can execute. So that is the plan, just so that we jog our memory and we know we've gone through that. And then, yeah, look, this will be my session focus for the following backtesting sessions. What I'll be observing, institutional order flow, and that is basically just looking and paying more attention to how the market is moving. If it's turning from a certain point, where did it turn from? Why did it turn from there? What was to the left? Obviously, there's levels we anticipate the market to turn to, order blocks, fair value gaps, the wicks of candles where retail liquidity lies. So that is something just specific I'm keeping an eye on. And then similarly to last week, still just looking at how likely it is that a pair will retrace beyond 100% and if it exceeds the 79% OTE level. And then adding 5 to 10 pips to each stop loss. So starting on EURUSD, we were at these weekly highs last week. We closed with a retrace candle. And then from a daily perspective, we were within so that's either our minor swing or this major swing, or that major swing. We got the daily, we got this order block here. we do also have this fair value gap here. Mm, Put that on the low time frame so that you can see it. So we come down into the 4 hour. We've got this area here that we could potentially react out of. I'll go on here. And then obviously the daily order block, which is a stronger region, but we are also at 50% of the minus swing. So anticipating a potential reaction out of there. But looking at our plan, obviously the plan wants us to be at EPD. If we aren't at EPD, I'm only taking setups in alignment with the current bearish trend that you can see on the 4 hour side. I'd only be looking at shorts technically here. But I mean, let's look and see. So we get a mitigation of that. And asking myself, are there any sniper entries then? Because like 4 hours still bearish, but if I'm looking for a long setup, then I'd need to be within a 4 hour or a daily order block for a valid long setup. And you can see we're not in an order block as yet on the daily or 4 hour, which means the only setups we can really take are on uh, are these 1 hour or out of 1 hour, 4 hour key indicator areas. Because we have mitigated counter trend our entry if we're still looking short, because I mean we can't take any longs as yet until this 4 hour structure shifts. So I need 4 hour, 1 hour price because you can see counter trend, or the other, but it's not this one. It's the setup, but it's still a resistance setup. 4 hour, 1 hour price to be within a key indicator area during London or New York. We look at what key indicator areas we have resting above, just so that we don't waste our time. We have this two-sided fair value gap. And then on the 1 hour, nothing really in terms of order blocks, fair value gaps. Look, we've got right there that aligns with this one-sided on the 1 hour. So this is looking like an area that just seeing price gravitate towards. We see it gives us a nice run of liquidity. That obviously then shifts our structure. But nothing really. Look, we've got this order block here. This was violated though, arguably. It violated. We had already tested this. Could test it again. Let's see. This is our. So we've got a sweep of liquidity within here, but I mean it's also. So I wasn't. I did take note of this last week, but I wasn't. I. It's not an area that I was looking to take a trade out of. But I think it would be interesting to see if there was a setup and, look, if I did take it, what would the outcome have been, win or loss? I think that is the purpose of these sessions after all. So you can see this is our current 1 hour range. We've got the 1 hour order block. we can see IPTA is to the downside, meaning we are repeatedly consolidating, breaking to the upside, distributing lower, consolidate, sweep to the upside, break lower, consolidate, sweep to the upside, break lower. So looking for the same, just sort of pull back consolidation, take out short-term liquidity. This order block literally rests nicely at 61%. And so would be interesting just to see how price plays out. So I'm going to fast forward this just to closer to the kill zone. There, you can see we actually are starting to get some protraction higher. So this is Monday morning. I think I was still busy with finalizing my plan. So I actually wasn't trading Monday at all. So we can see we're starting to get this protraction higher. We have satisfied this. In terms of this, yes, price is in alignment with the 1 hour range if we're looking for shorts. It's priced at EPD. It is at 50% now, but our entry area is looking at 62% because remember, I need to be within a key indicator area. So I need to be in that order block. Fortunately, that order block lines up quite nicely with that optimal trade entry area. So I need a protraction. I'm getting a protraction, and then a key area mitigation or time-based liquidity sweep. So the order block, will be my key area sort of mitigation. But then I'm looking for this time-based liquidity sweep. Also, just given that it's a riskier order block, so I want to see that swept. We have just another confluent order block resting above here that we haven't actually tapped into as yet. It's resting literally just above. So looking for that sweep, and then obviously entry criteria to be met to then take this lower. So let's see how this plays out. I'm going to bump it up a notch just so that we okay, and this has gone beyond my London kill zone. London kill zone is at 12 or ends at 12. And so yeah, we formed this high now, and just another area where we could potentially sweep liquidity. I'll put this up until the end of the kill zone, which is 6 o'clock. That's the last point at which I'll be looking to take a setup. And let's see how this plays out. Obviously, setup still the same. We're just looking for that protraction higher. Let's see if we get it. Okay, we're protracting higher, but no, we don't really get it. That's fine. Let's just see how price plays out. We start selling off just ahead of next London session. So this is technically still valid, so I'm just going to pull everything to Tuesday now. Like we can cut this one because I'm really just looking for this, and so that I'm not playing with too many tools and things are too messy, we can cut that because we end the order block. London protracting higher but nowhere near our entry area. Then we start to head low and we actually form another range. So we're actually out of our main range, and we formed now, and we're just deeper within this fair value gap. So we didn't quite get our entry area. And again, look, I had criteria just wasn't met. Arguably just missed out on that order block. I think we pierced it. We did pierce it. because this definitely moved and we came to equal lows. So I just want to see if there's something that I maybe missed. Mm, Arguably, that's our sweep. So technically did get a sweep of liquidity at London. I was just looking for this far one to the left, which we never really ever got. So we mitigated our EPD, our um, our our key indicator area. So 15-minute order block. And then just looking at well, where would we have, what was the candle that sort of reversed? I think it probably would have been here, no? Here, probably would have wanted stops. Let's just say 15 to be safe. I'm going to look at the micro time frame now, down to these lows, because this wasn't really, if I look, this would have been the ideal entry that gives me a 1:3, but that's not any of the reversal candles that I look for. It probably would have been after this second bearish candle here. On the 5-minute, did we get anything? We did. Here's an order block that we, a fair value gap, I mean one-sided, that we invalidated. So that criteria was met up there. Yeah, it was just on the 15-minute that the actual reversal itself was not, just didn't give me enough space because my risk to reward then wasn't sufficient. So yeah, look, no price did do what we wanted it to do, but and I actually I missed the setup as I was looking if I missed the setup now. But look, after the move played out, I caught on that. Look, no man, this thing came up into the area. Um, it looks like it did what I needed it to do. Why didn't I take the trade? And then looking now in hindsight again, I can see that the entry confirmation wasn't uh, met in a sense. So got through our high time frame, got through our trade parameters, but the entry confirmation didn't print a proper reversal candle. Yes, we had the micro time frame shift, but we also didn't get the risk to reward. So the plan was not met in full. Um, and that's fine. We kind of just walk away and move on. Now looking at the next 1 hour range, this is now Tuesday, heading into New York. One-sided fair value gap at equilibrium. There are others, this order block here. I just don't like order blocks that have already been mitigated and then price moves away, even though there's nothing in the mentorship that says those can't still hold. But that's the last one before our 79% level. Yeah, let's just see what price is doing on these low time frames and these micro time frames. So we're within that 1 hour range. You're now looking for protraction higher. This is also this wick here. Is more of a breaker block. And so, yeah, this 50% level is looking really nice, but I don't think we'll get it now in, oh shit, we do get it now in New York, but look, we break straight through all those levels and we head up higher into that hourly order block. And then we've got a reversal candle. Just coming down onto the micro time frame. Nothing yet. That's our fair value gap. We do have a shift of structure. Do we have sufficient risk to reward? $13 pips. If 1.82 to that low. If we extend it all the way down to the daily order block we do, but because we're in this daily fair value gap, it would be safest to only extend it down to these lows here. And look, there's an element of, I guess, me already knowing that it doesn't actually get to this order block as yet. I don't know how far in it goes on this fair value gap. But the risk reward isn't doing the things, man. And for whatever reason, I didn't have this on watch. I think because I'm looking at all the small little order blocks that I just wasn't paying attention to, and arguably because other setups just looked a lot better last week. But I guess that's the purpose, to see how these little sort of levels play out. So if we can get deeper into this, and then I can get a tighter stop with stops with then TP at this low, then that would be, I think, ideal. Oh, we don't. It's kind of gone. And you see a TP at these lows or just below would have been ideal, but that was only like 1.87, given how this moved. So nothing as yet. I see new 1 hour range. Same order block. Yeah, with an optimal trade entry area. Got the sweep of liquidity. And what looks to be that engulfing. Again, same within that same order block. At EPD, this is Wednesday now. 5 minutes within this two-sided fair value gap. And on the 1 minute, we got a market structure shift. We did get a market structure shift on the 1 minute. So yeah, this is actually, well, let's see if we get our risk to reward, but this seems to be game on. And the clips is there. Ideally like stops above there, even if it's just like 13 odd pips. Mm. Even if I make it 100 and it's just above the highs, I don't have risk to reward to the equal lows. Guys, I'm not trying to backtest trash setups. Again, I need to catch myself because this is arguably because I know that at some point this rocket's higher. Um, but yeah, the stop didn't even give me 1:3 there. So it would have resulted in a loss, but it wasn't jumping out at me in any way. So um, were some setups there. If I was desperate, for entries, then some things I could have caught there. But yeah, overall, just a messy corrective area that was really gearing up for the reversal high that we're seeing now. You can see from this sort of just descending formation, um, like so. And then we've rocketed higher, um, coming into these areas that we see here. Got that above, got this one-sided here. I think I do recall we actually reversed from. So I think so we do blow through these. The only argument is now look, we've shifted structure. Um, but now potentially looking for both counter trends and pro trends. So if my trend is pro trend, um, if I'm looking for long setups, then I can just proceed trade parameters. If I'm looking for short setups, then I need price to be within a 4-hour key indicator area. And just looking at where that may be or what we have in terms of looking for shorts. So we do have a 4-hour. This is a large two-sided fair value gap. So we do have that. And if we're looking for longs, obviously then we can just proceed and we'll be looking at where the price is within the 1-hour range or not. Let's see what we get. We're not within. Oh, okay. Now we are. It's actually just post London. No reversals really that we got. And that's 12 o'clock. So we'll look for potentially a sweep. We're now within the 4-hour fair value gap, the two-sided. This is for short setups now. This is our pullback rider, pro trend 4-hour. counter trend entry. But then again, okay, come to our trade parameters. Is it alignment with the 1 hour range? Definitely not. Our 1 hour range is clearly bullish. So we say no. Is it clear? Interbank price delivery algorithm. Was our sweep, and then distribution higher. You can see this one here. Look, sellers did get a decent move to the downside, but this ultimately was a sweep of the downside, and then that's where we reversed higher. But that's part of the larger one now, and then this obviously occurred within that. So everything's kind of pointing to the upside. So not super clear. I think, and this is why I said at the beginning, this comes down to a bit of discretion. So with this, if we get maybe a bit of a consolidation, maybe we sweep to the upside and then we distribute lower, then for me it becomes clear then that we've shifted, and then I can start to look for consolidations to then sweep the upside and then come lower, and look to take that short. So um, let's say no, not yet clear that price is coming lower. This still looks very bullish. So there's no setup as yet, but I want to play this out on the 15-minute just to see how it plays out, even though there's no setup here. I think we'll just have to see how this develops over Asian session. And now we're heading into Friday, which is NFP, and arguably this is gonna do what it's gonna do, honestly. Technicals don't really. And again, I think this is kind of just confirmed what we had been plotting out, in that we entered this corrective phase here after price pushed up. Swept to the downside. And then didn't really displace to the downside. It was more collecting orders below that low. And then I think we're gonna rock it to the upside at NFP, which is somewhere here. Geez, we're doing all sorts of things. I think this tapped into, yeah, it did tap into that fair value gap. Yeah, so just a lot of noise there. But yeah, no setup here. So really the setups that did come were very low quality, just sort of valid setups at the beginning of the week. So yeah, if you wanted to really get something, um, there was setups there, but I wasn't looking at these order blocks here because these aren't the type that I like to trade earlier in the week. Mm, yeah, I was more focused on just higher sort of probability setups. But yeah, I think the fact that I didn't take a setup on this last week, I'd say that's fine with me. There wasn't any setup that I particularly just kind of missed out on. Um, and so I think that's good that I followed the plan and sort of prioritized the higher grade setups for the week. Yeah, which is what we try and do. Um, and yeah, you see why I said this kind of session takes long. While I can go down into the 1 minute, um, it it does take up time. And so what I think I will do and what I've started doing, again, just to optimize these because um, I want to make sure that there's obviously this is good for me, but I'd ideally want to find miss setups that and journal miss setups in this time, then try and find miss setups. So I think for next week, I'm going to keep this format, but I'm going to identify my miss setups in the week. Um, Same as I've kind of started doing this week. There's a miss trade on GJ that that I will map out now, and then and let's maybe actually just go to it, and then I know which setups I actually missed um, on which pairs, and then I'll go through the same way I went through now, and not journal them, but just identify them. But to be honest, I should be identifying them on a daily basis. Um, UJ tanking nicely. Um, should be identifying them on a daily basis, and then when I come to these backtesting sessions, it's more about backtesting that specific period um, of time where, yeah, I obviously missed the setup, and then I can journal that in detail. For example, here, GJ yesterday, this was short. This was supposed to be my stop, very large stop, but it's a very large TP as well. Um, and something that I probably would have held over the course of the week. Because this is right down to this level here, which sufficient risk to reward though, even with such a large TP. Yeah, see down to there. Um, I think it probably would have closed, yeah, would have closed 50% this morning. But yeah, missed this. And you can see it is on my mistrades watch list. But I've now just marked it out, the exact entry that I should have taken stop loss TP. And then I can just hide this and then next week we'll backtest that in a lot more detail. But I think I'll just spend 5 minutes now going through what I'm seeing for, yeah, London kill zone. And I guess today, Wednesday, 11th of September, that was a very productive session actually. Thank you guys. Yeah, I'll start on dollar index. So this looks like it's correcting nicely. And we are, or were rather, at the 79% level of this 4-hour impulse lower, which was kind of halted by NFP last week, where NFP saw us starting to shoot a bit higher. And so also added this just to see where so that is the current one we're talking about. And I'm seeing this as more of a pullback on dollar index than a continuation lower, just because I think on the daily, we didn't really tap into this equilibrium level, and we turned so close from it. I see this more of an inducement because also we've respected these lows to the left here. So I think a bit of a correction, and then we will continue higher. But then, yeah, look, where we're correcting to. Currently within this fair value gap, it's a one-sided fair value gap. So arguably, obviously, if it breaks, that's a high probability that we are maybe going to head lower. But again, we do have another fair value gap below, break a block as well. And then if we take off that, which explains why we're correcting now, and put on the current swing fib, which will hopefully give us an indication of where we are correcting to, we can see that 50% lies below both those fair value gaps, but still within this, I think it's an hourly breaker block. Yeah. So, yeah, price achieving EPD on this 4-hour swing is questionable on whether that's going to hold, just because it invalidates two fair value gaps as it does so. But yeah, at the moment, seeing this just sort of pull back a bit deeper. And with that, I thought we would be seeing more momentum on EURUSD. Look, we've just touched this order block here now and are reacting higher. So we've been correcting lower and lower the entire week. From a daily perspective, we actually did just pierce that order block now and are pushing higher. But we didn't get to the 50% of the major swing, which was confluently the 62% level, which I still do think we're going to achieve. But again, that's not about what I think. It's about what the market's actually doing. And I need to kind of reinforce that this week, where it feels like my bias is not in alignment with what the market's doing, because we are correcting higher. But then again, I'm just trying to build a narrative here to see, or at least keep the bigger picture in mind. So we've got this 1-hour this one-sided fair value gap on the 4-hour that we're trading higher into. If we do get there, we'll shift structure on the 1 minute, and arguably we have here this high, low, and then high, high. Just be looking for that to potentially continue, and then reassess once we get in there. But we obviously won't be in alignment with the 1-hour structure then. So potential longs in play here. Look, 4-hour is still bearish. Yes, it's still bearish, but remember, we just come back here. 4 hours counter trend, but my entry is pro trend now. Pro trend the daily or 4-hour has price mitigated or formed an order block. We've mitigated from an order block. We are arguably within this new 1-hour range, so I can take long setups up into that order block. It doesn't stop me from executing, which is something that, yeah, I'll be looking to do today. If we get a pullback there, that 50% EPD level correlates quite nicely with this run of the low. And obviously, as dollar index corrects a bit deeper, we could just see pull off here into that level, and then we head higher. So potentially looking to take EURUSD higher today. Um, yeah, as price corrects a bit deeper in alignment with dollar index. And then on AUD flat, I need this to start moving before yeah, I look to risk capital here. I'm gonna take this off because that seems invalid now. And then this is a 4 hour. There's a 4 hour one-sided fair value gap. But again, this has come down into that daily order block, but not yet at that 50% level. So if we look at this sort of minor swing, yeah, look, it puts us at the 62%, but that's arguably not the greatest correction. So I'm gonna stick to this, and but look, we are at a daily order block now that has never been mitigated. Clear deceleration. Um, it's clear on the 4 hour. Obviously wicked lower. Yeah, I won't discount it. I will not discount it. So we are looking at priced in within our optimal trade entry area. We've got mitigation of this order block now, as well as this one-sided fair value gap. Time frame fair value gap, that's on the daily. And so yeah, are we within 1 hour range? Not really. I think I'll still need this to move because if that isn't clear yet, this has just been messy and sideways. So I think regardless, I'll still need a reaction out of here for me to yeah, look to position myself on this pair. Pound JPY tumbling very, very nicely. 1 hour has now formed a new range, which I'll be looking to just capitalize on. We just had this correction over Asian, which formed this new low. So yeah, 1 hour's falling, 4 hours falling. We could head into a deeper pullback at this point. But again, still within our optimal alignment sort of setup. We've mitigated EPD, pro trend, my interest pro trend, optimal alignment, looking at this price within in alignment with the 1 hour range. So we need this to be within 50% just for us to take an entry. So might not get something in London, but we'll definitely be looking for trades in New York, depending on how this shapes up. But yeah, looking for obviously a correction up into these regions, and then for price to head lower. But then arguably could also get a much deeper just pullback now. But yeah, I'll just ride the wave while it's there. So I'll just mark out potential entries there. Nothing on AUD, potential entries here, and I already know nothing on USD JPY. That is because we are now at the daily we've reached our daily targets. So we're now out of this range. And I need to wait for now a pullback towards for now the next essentially swing to form. Then I look for pullback to trade that higher. But at the moment, price has achieved daily take profit. This is the swing. Well, this is the move that my trading plan essentially looks to capture. This move, once we've established this trend coming up, so probably somewhere from here up, and then this move on the way down. Anything below here kind of is a no-go. And then obviously once we've established the next trend up, I'll look to capitalize on that depending on wherever it's coming to, and then look to capitalize on the move coming down. So yeah, that's how I'm looking to head into today. Basically, Euro USD, Pound JPY, not the greatest setups, but obviously Pound JPY, right, just riding that wave. Euro USD could be a very clean setup in alignment with dollar index, so we'll definitely be keeping an eye on that. And yeah, that's how we look to take it. Enjoyed the session. We'll continue this theme, but obviously just looking to optimize it so that we can get through all the missed trades in one session. Remember, guys, consistency is the choice you make when you start doing the things you know you should be doing day in,